Good. Let's go, Vi. Good.
Hi, everyone. Welcome to our market talk. So, 2 weeks have passed. What an interesting weeks it has been. So, Fed cut rates by 50 basis points. I know that majority of people, including some of us, was really surprised. And uh, when you look into markets, it looks like market likes this decision, but is it the entire market? I don't think so. So I'll touch on that a little bit later. But yeah, I'm sure we have a lot to talk about. So let's start from Ted. Hi, Ted. So interesting Fed decision, and what the numbers are showing.
Yeah, I think we were all thinking 25 basis points at the last
Yeah,
time
we
we met,
did.
which was a week before the FOMC meeting, and then the next day, Nikki Leaks came out with his 50 basis points maybe. So anyway, that's what we got. So let me share my presentation here. Bear with me a moment. Okay. All right. Today I'm going to do something a little bit different. I will touch briefly on macro regime, touch briefly on policy response, but I wanted to talk about what happens when the Fed cuts rates near all-time highs. And I did a deep dive this weekend on that, and I wanted to share what I came up with and why, as I mentioned, I'm super bullish at this point. And then also go over a few trades, mostly some new stuff that I put on since Monday. Macro regime has pivoted from my favorite macro guru to Goldilocks with no deflation characteristics, just pure on Goldilocks. Why is that? Inflation's down. This is a forecast for tomorrow's PCE report. The PCE is projected at consensus is plus 2.6% for the year over year rate, which is interesting when you compare it with where the Cleveland Fed is, their nowcast, which has been, I've followed this for 2 years now, and they're pretty darn good. And so they're at 2.33. This is a potential, this disparity is a potential catalyst for bond positions, which I've had on since May, June timeframe, which are starting to get really long in the tooth. So if we get this close to 2.3 versus 2.6, could save my my bond cutting that may follow here. So we'll see. GDP now, this is Atlanta Fed, still strong, 2.9% as of, I think it was the 18th of the month. Yeah, 18th of the month. This is the day before the Fed meeting, or the day of the Fed meeting. They came out, day before was 3%, day of the Fed meeting was 2.9%, S&P 500 near all-time highs. So it closed down a little bit. This is the day of the FOMC chart. You know, right at the top. Arguably, you got a triple top. No such thing. And so into FOMC we go. Powell says, "How about 50?" You like that? Sound good? 50 is what we got. And the question that I had is, what happens when the Fed cuts rates with SPX near all-time highs? I spent a good amount of time with ChatGPT 4.0 going through scenarios, and I want to share what I came up with. All cycles going back to 1985 when the Fed cuts, just when the Fed cuts, start of a new cutting cycle. Average returns during that period of time, 1 month was plus 1.5, 3 months plus 3.5, 12 months plus 10%. Average returns, basically, you could argue. But when you take out the cuts that were emergency cuts, such as 2020, such as 1987, such as 2008. When you take those out and you look at FOMC cuts near all-time highs, so S&P's near the all-time high, 1 month return goes to 2.3%, 3-month 5.5, 6-month 9.8, 12 months 16.2%. So super bullish when the Fed's cutting during a period of time when there's not a crisis to be averted, and is, you know, arguably the economy is in good shape, inflation is down. Here's a detailed breakdown of the 4 periods that this happened in. Granted, most of these happened in the mid-1990s, but you'll see in July 1995, from 1 month to 12 months, 2% to 23.7% during that cutting cycle. It was a rate cut in a moderating economy. So very akin to what we have going on now. In 1997, it was late 90s bull market. 1 month was 0.7%, 12 month was 9.6%. We had a Asian financial crisis in the middle of that. And then in September of 1998, economy is still growing, inflation still moderate. We had another Fed rate cutting cycle. We had 1 month returns from 6% and 12-month returns almost 32%. And then when we look at July of 2019, and this one was hard for me to believe just because of when it happened. So the rate cutting cycle started in July of 2019, started softly, but finished plus 14.7%. And mind you, during that period of time, we had the pandemic and a 30% plus drawdown of an SPX. So from July of 2019 to July of 2020, we were up 14.7%. When I look at the best analogs for what's just happened, it's the July of 1995 cutting cycle and the July of 2019 cutting cycle. So, you could realistically expect returns in this neighborhood, a pretty wide range. Again, 16% was the average for each of these cutting cycles. Laying on top of that, we have our friend Mr. Ueda, who a day later observed an increase in inflation to 2.8%, said, who cares, we're not going to hike. So no hikes for you. And then we've got this thing going. I guess the chair of the PBOC is named Pan Gongsheng, and he's on Monday said his bazooka was big. They infused capital into banks. They did loan coverage for local governments. They provided stock market support. They reduction in down payment for second homes. They did interest rate adjustments and mortgage rate cuts, and said on Monday, or today actually, that they reaffirmed that and said, that's not enough, we'll do more. So where does that put us? At this point in time, I'm long FX, everything but dollar. I have a small dollar position that I cut, but so short US dollar, which is new for me. I've been long FX positions, but looking at shorting now, US dollar, continue to be long gold, taking profits along the way. Mixed on commodities, metals and ags up, oil under pressure. Long bonds, I've added this week on pullbacks, but I've got this on a short leash. My stops aren't far from where I've been adding. So I'm really looking for what's happening with tomorrow's PCE as a possible catalyst for another leg higher bonds. But if I have to cut, I'll cut. Long steepener, again, short leash. We talked about that. That's primarily the eyeball trade. And then long equities, and I've gotten overweight EM as well as developed markets. And I'm keeping an eye on defensive factors that we've gone over the last few times we've met, which have been just outperforming and looking for potential failure. And a failure there would be really a confirmation of this new Goldilocks regime. So as I look at going over to, if I go over to some of the charts, let's start with UUP, which is US dollar trade. I got long here on a weekly signal, and those that have followed know I use weekly to get long or short or sell, depending on where we are in the cycle. I did get long here. I started cutting in this period, so I basically cut that dollar position to very little at this juncture. Yesterday, I thought we might get a continuation, but it definitely failed today. I started getting long again, FXA, which is the Aussie. Started buying Monday, bought Wednesday. Worked for me today. I got long, as you know, just before the last meeting. I got long the pound via FXB as well as the euro via FXE. During the same period, I took some profits in here. I was still long. This thing's still working at breaking out, continuing to go higher. By the way, the Bank of England maintained its 5% interest rate policy. So on a relative scale, they're a little more restrictive than the Fed. FXC got long here this week, adding to positions, bullish trend. My lines indicate bullish versus bearish, which would be a red line. You'll see no more red lines, but for the dollar. FXE, I mentioned, got long here, continuing to hold the position, performed well today after a breakdown, a little bit breakdown yesterday. FXY is a position I've had for quite a long time. We've gone over this a number of times. I've started cutting that position when UATA came out and did not defend the yen. I really started cutting, and my signals have indicated that I should be cutting. We'll see what happens here, but we've got a weak dollar, and yet the dollar is strengthening against the yen. So that may be the end of my position. I got a very small position left at this point. UDN is a new position for me. That's a short US dollar ETF. Opened that position on Monday. It had a really strong volume day today, so it looks like someone at least agrees with me. So I'm short dollar basically across FX and literally with the UDN now added to that position. Gold just continues to rip higher. When we last met, I took a little bit off. I took a little bit off this week. Position still a decent sized position, but thing just keeps going. DBB was a position I got long last week, Friday. I think a lucky hit. It was really right on the margin for me. It was neutral trend, trying to make its way bullish. I got long a position, and it's just metals have ripped higher this week. DBA I got long the week before at the top of the range, which is on a weekly signal, and it's I don't like buying here. I don't like buying all-time highs, and yet here we are, continues to go higher. Bonds. So I've been long IEF for quite a long time. This is the 10-year. I bought yesterday, adding to my position. I now have a full position in IEF. My stop is not far below here, and I will get out if this thing doesn't turn. So I bought at what I consider to be a good location. So I'm the risk reward in my world was decent, so we took the shot. Eyeball, this is one where I added last week. I sold a little bit this week at the top of the range, and it's starting to break down on me. This is my steepener trade. I really would have expected this to continue to perform. I expect if we don't bounce here that my stop will be hit coming soon. I think my stop is, I don't want to go there. I can go there later if I need to. TUA, which is the 2-year. This, I was underweight the 2-year. This is that leverage 2-year that's from Simplify. I basically have spent the last 2 weeks building that position. I've got a full position on at this point in time. And again, bonds are in that spot where they're either bouncing here or I'm starting to cut my losses. I don't really have a loss here, but this last build is about break even, maybe a little underwater. MTBA, which is a simplified mortgage-backed security ETF. I got long that this week. Got a full position pretty quickly. So I bought on Monday. Filled the position yesterday. It's again in a situation where I'm expecting that it will turn or I will start to get out. And so that's was up a little bit today, but not much. So mortgage backs preferential yields about 4.8%. Should do well in an easing environment. EEM. So I've been underweight, as you guys know, in equities for a long time. My system just had me out. It had me wanting to get back in. I started adding aggressively early this week. I added EEM, a little better than a starter position on Monday, and I lucked out with what's been going on in China and also in the Pacific Rim. I have not been able to add to this position, just given the rapid move that it's had up. Same with FXI, which is China large cap. I got long a starter and a small position on Monday. I held on to it. I mean, it looked like it might. I mean, shorts seemed to come in right after it went up, and whoever they were got smacked today on another 8% move up. Wish I had a bigger position, but I have one. And then I'm starting to add to high beta. So this is SPHP. Added to that position, added or started that position on Monday. And then also adding to opening new positions in Australia, EWA. Long that position, started Monday, added yesterday on the pullback. Also have EWC, by the way, same scenario. IWR, which is mid cap. iShares mid cap. Been building this position all week. I know you guys were talking a little bit about what's been happening with small caps. I do have a small cap position, but IWR is a new position, and we'll see where it goes from here. And then two more. GNR, which is Global Resources ETF, got long yesterday, worked well today. It's just recently come above bullish trend, so it's a new position I will add on pullbacks. And then lastly, VPL, which is Pacific, is the Pacific Rim, got long Monday, pulled back yesterday, should have added but didn't, and then it was up 3% today. So pretty good week overall for the new equity positions. Good week for gold and metals, and a marginal week, as well as for FX, and a marginal week or down week for bonds at this point in time. That's what I got.
Thank you, Ted. I have one question. I think it will be useful also for our listeners. So, for example, with your FX views, when you have at least three positions that are, well, not the same, but very similar, how you size up and manage and treat those positions when you have literally multiple things that some people would say move together.
Yeah, it's interesting because I do position size those based on realized volatility, as opposed to implied volatility. And so the positions are very different in size. So FXE and FXB are quite a bit larger than the FXA and FXC position. Now, FXA and FXC, which are Canada and Australia, arguably are different than Europe and Great Britain, right? Just because they're more of a commodities play versus more of a yield, relative yield play when you're talking about the euro and you're talking about the pound. So to answer your question, each position is looked at independently, but it's I don't have huge positions in any of those, but yeah, I mean, it's a good point. It's kind of like, well, you know, you've got Qs, you've got SPY, and you've got IWM. Are you really diversified? No, but when you look at the full range of assets that I have across the mix, I've got really not a lot of non-correlated returns, and my returns this year have been largely a function of not so much stocks, but it's been bonds and FX that have kind of worked for me. So this.
Yeah, thank you. So, Raphael, I know you have a lot of interesting stuff for us. So, what's happening?
Hey guys, so the changes this week where I took a position on CAC. I mentioned that 2 weeks ago. And I also had a small position on copper, which I cut actually today. Still long S&P, gold, and silver, but I cut down the size, and I will explain what's my thinking right now. Okay, so we're gonna go with ES first. So volatility of ES and NQ looks the same, are definitely pointing down. So we have a trade here in black and volatility itself in blue pointing down. So we are decisively bullish. So volatility and trade of volatility of ES are bearish. They are pointing down. Another thing also for ES, contrary to NQ, is that also trend of volatility is pointing down. You can see here on price, it's pointing up. So even on long term, what I would call long term volatility, its volatility is bearish, and the trend is definitely bullish. NQ is a little bit different. For now, only trade and volatility are pointing down, not yet its trend of volatility. So I've got actually some sell signals on ES and NQ. So you can see the small s here. There are sell signals. I also have a matrix, which at least for me indicates momentum at the top. I also have something to say about the VIX, but I will address it afterwards. But still, MFR is saying that we are basically in the middle of the range for both. So still upside, and we are getting less and less downside as we are moving forward in time. So what I'm expecting for now are basically two scenarios. So I've drawn some arrows here. There are two scenarios I'm considering. One is we are going to have a sell-off to retest low of the range, trade, or trend. It will be a buyable dip to add more to your long bet for equities. You can see here, this is basically what happened here, scenario one. So you basically get the sell, retest of trade and low of the range, and then we move back up. Scenario two, we got the sell, we just chop, low of the range just catch up with price. You add as we are testing the low of the range, and we get the move up. I'm not saying we're going to get the sell-off here. I'm just illustrating when the sell signal manifests on ES. So that's currently what I'm thinking regarding ES. I'm not opening new positions. I'm basically day trading, and I'm waiting to see when those sell signals are going to disappear, and I'm going to watch closely what the price is going to do. If I'm starting to see some sell-off, price going below low of the range, I'm going to wait for the retest of trade. If I'm just saying some chop, like scenario two, I'm going to start buying after a few days for the next leg up. So that's for ES and NQ. I can show you NQ, but it's basically the same. So yeah, you can see matrix here, volatility pointing down, trade going down. Trade still hasn't crossed trend. So that's a bit problematic, but I'm going to address maybe why when I'm going to go with the tech stocks later. Okay. Yeah. Now let's go to Europe. So Germany is making a new all-time high. I mentioned 2 weeks ago that it failed here to break trend, and I was expecting price to catch up. Now we are back to all-time high. It's exhibiting the same pattern. Volatility is down, trade of volatility is down, and also trend of volatility is down. But as for ES and NQ, we are approaching a matrix top. So not acting, just watching. For CAC, so this one has been in a bearish trend for a while. And 2 weeks ago, I mentioned that I would be considering to buy. What we got was volatility decisively breaking the floor. And now we are, I think, about to see trade crossing trend and CAC about to catch up on his German counterparts. Sorry. So yes, that's for CAC. FTSE is doing sideways action, but looking at volatility, it's making lower high. So I would not be surprised to see FTSE actually starting to move to the upside. I'm not going to take a position on this one. I'm just watching. I'd like to see this one move actually to get a confirmation that market participants are coming back. Now Nikkei, I was quite bullish on it, but the problem is that volatility for now is still really elevated. Its trade is also quite far away from trend. So despite the fact that I was quite bullish, sorry, for Nikkei since I would say since the dip, I'm now less bullish on it. I'm thinking maybe Nikkei will have to chop some more for maybe a few weeks, even maybe months, so that its volatility will be decisively down. So if you are long Nikkei, I would say expect to be chopped around in the next weeks, maybe months. Now DXY. So I've seen Matt posting a lot of data about the correlations, and indeed the correlations between dollar and basically everything has been deeply negative for now several days. So you can see here the correlations that we monitor on Myfractalrange. So here you can see UUP, it's inversely correlated to basically everything, and it's deepening. It's deepening. Now we are on the 5-day return correlation, we are minus 0.8, which is quite significant. So this is something you should really monitor. And what I'm expecting for DXY, so volatility is starting to go down, but for now, I don't see anything significant. The thing is, DXY now is at trade. And based on the previous instances of this kind of pattern, there are two different scenarios I would consider. Scenario one, which is actually my, for now, my favorite is I think it's going to be a fade. DXY is going to do some new lows, which would, I think, surprise many, and enter chopping action. So you can see here the volatility of DXY to remind you of what you have seen on Nikkei, for instance. Volatility is going up, trade is going up, so I would expect a big slide down until it can find the bottom, and then some chop action for weeks, maybe months, until DXY turns finally bullish. So I'm definitely not bullish for now. But still, there is a scenario two. Scenario two would be a reclaim of trade, which would indicate a transition back to bullish. This is not my favorite scenario. I don't think it's going to happen. But if you have access to my script, you should monitor the reaction of DXY with trade. If it starts to reclaim trade and start to go up, retest trend, we are having a change in the dollar, and the correlation will matter big time. So you have the two scenarios, monitor those two, because I don't think there will be another one. I mean, it's basically the two I'm expecting. Now going to VIX. So I did a tweet, I think it was yesterday. So my concern right now is trade of volatility. So this is a black line here. Trade of volatility is very elevated. And the way it works basically is, it works also on the downside, but it works on the upside. At some point, trade of volatility will not be able to push volatility to the upside anymore. meaning that volatility of VIX will find a ceiling, and the only way for it will be to go down. So I have checked the previous instances where trade of volatility was that elevated. It actually happened only a few times. I have found only 5 times. So you can double check if you have access to my volatility script. You can double check 5 times. 4 times, 4 times in the 5 times, what you had was retest of low of the range for NQ and ES, retest of trade or trend for NQ and ES. So 4 out of 5 times what you had retest of low of the range, trade or trend, and then ES and NQ continued their rally. So it would confirm the scenario, I think it was scenario 1. Let's go back to ES. Yeah, it would confirm scenario 1. So my expectations currently is to favor this scenario. 1 time out of the 5 times trade was that high, we had a pop on the VIX, retest of trade, trend, etc. But the problem is on the consequent move up for ES and NQ. They failed to do new highs. And after that, we entered actually a bear market. So monitor what the reaction will be of ES and NQ on the, I think it's coming in the next 2 weeks, I would say, on the next pop of VIX, probably to trade, probably to trend, monitor where. And the second thing you will have to monitor is where is the bounce going to on ES and NQ. If we fail to make new highs, that would concern me big time. If we don't, then we are basically going to continue to rip. So so yeah, that's my take regarding VIX, its volatility, and how it mirrors what I expect for ES and NQ. Now for CL, so oil. I mentioned 2 weeks ago that if you bought here at 65 when the buy is triggered, so yeah, I will not reactivate this one because I showed it 2 weeks ago, but anyway, the target was 71.72, and that's basically what we got. Yeah, 71.72. I hope you at least took some profit if you are long. The volatility of CL is just terrible. I mean, it's just going higher and higher. Matrix is turning. CL didn't even do new highs on this pop. So my expectation is CL will continue to go down. I actually have a target for end of this year or beginning of next year to $50. So I would not be surprised to see CL go down. If you are a true believer of CL, this is the kind of pattern you want to look for. You want to see a reclaim of trade, reclaim of trend, retest to confirm, and then you take the position. This is one instance. I want to show you another just so you can print this in your mind. So reclaim of trade, reclaim of trend, here retest, and then you start the move up. So this is definitely not what we are seeing in CL, which is confirming the fact that the bearish trend will continue onwards. So if you got the dip here, I hope you got out, because I'm expecting this thing to continue to go down, experience some chop afterwards, and maybe in Q2, end of Q1 next year, maybe a start of a transition back to bullish. Now to gold. So the target was for gold to get its trade of volatility to the mean, the daily mean number 2. Okay, so I mentioned that also repeatedly. You have to, if you are using my volatility signal, you have to mark the historic lows of trade, because the same way VIX works with trade unable to push anymore upwards the volatility of VIX, it works also for the downside. At some point, trade will not be able to push volatility of the asset more down. So what's the only way for what will be the only path for volatility of the asset will be up. So volatility up means the asset goes down. So now trade is at mean, so you have to expect volatility to rise back up. Now there are 2 scenarios after we reach daily mean. The first one is consolidation. So you can see here in April 24, trade reached the daily mean 2. So I call it daily mean 2 because it is the ultimate mean before price start to behave in a different manner as it was behaving before. So you enter consolidation, and this consolidation for this one actually lasted from April to June. So multi-month consolidation where people get chopped around and don't understand why gold is not performing as it used to. So that's actually my expectation right now. So now I have half the position I had. I moved up my stop, and I would expect this kind of price action. Now there is a second scenario that can happen when we get to. Sorry, I'm going to reset the chart so I can find it. There is a second scenario that happens when you get to mean. It's when you have a transition, usually, obviously, macro transition. And sorry, getting there. Okay. And this is what you get. So here, reach mean, you have a top, and gold enters bear market and just goes down until we have a regime shift. So that's not my the scenario I have in mind. I think we're gonna get consolidations for a few months. It will chop people around, and then the bull market will continue onward. So I say multi-months, could be multi-weeks, but let's say consolidation. So don't how to say, don't be afraid of your long gold position if we start to experience this kind of consolidation with chop. That's only because volatility of gold doesn't have any more room down. So it has to breathe, it has to go up so that it can start the next move. So that its volatility can start its next move down, meaning next move up on gold. So that's my base case for gold. So then on to copper. So copper, I took a small position. I tweeted about it. I think it was mid of, yeah, that was this one, mid of September. So I replied to a post of somebody who was making a meme about people being long copper, like basically, look at this moron is long copper. I replied saying actually end of last week was a good place to buy. So yeah, behold the multi-week pop on copper. So I have cut it today. My expectation is a retest of trend. I don't care anymore about this one. It was just to play around. So if you are long copper, I mean, I would suggest to cut. Or if you are in this for long term, you have to wait to see what's going to happen on the retest of trend. Okay, so just a side note, because I posted this one, so I wanted people to know what my thinking was. Now on to silver. So silver, I had mentioned that the target would be 32. So we got there. Now you know my thinking regarding gold. And of course, gold and silver trade together. One difference silver has versus gold is that trade of volatility still have room down. So I'm quite surprised to see gold already there, but silver not there. So this is something I keep in mind. I don't know what to do with this information. But let's say we are using gold as a proxy to understand the price action for silver. So my expectation would be silver retests low of the range. We got some kind of consolidation there for a few weeks, few months, and then pop back up. Another scenario is we have a sell-off to trend, which would actually, I think, take a lot of people off guard. So we would move to 32 to 29 in a matter of days, maybe. So I made a mistake doing like go down and back up. I wanted to show consolidation, but you get the idea. Monitor gold, and I think it will be a good indication for what's to come for silver. But yeah, for now, that's my take on silver. I have a preference for scenario 2. I think we're gonna get. I think we're gonna get a multi-week sell-off to consolidate in this vicinity in around 29 or $30. So if you want to buy, that would be the place to buy. Now, I think Vi will address the Russell. So I put basically the Russell, Bitcoin, etc. in a category. So I always forget the name, but let's call it speculative assets. So that's what you want to buy when the economy is ragingly bullish, etc. And so we got the buy on the daily here, and we got the pop. Very nice. Now we have a trade trying to go to cross trend. Very nice, but it has happened before. It has happened here, and here it tried and failed. One concern I have for Bitcoin, it's its volatility profile. So again, if you have access to my script, volatility, you must have noted that so far, volatility was unable to break this floor here around, let's say, 6. So anytime volatility went to 6, it popped back up. And to 6, popped back up. And here again, we are at volatility at 6. And why it matters? It matters because when you have a bull market in Bitcoin, there is no floor at 6. Volatility will regularly go below, so even to 1. Yeah, basically you can see here, I have highlighted in the black rectangle. So this is what volatility looks like when you have a bull market. And so far, we are unable to break the floor that was established here. So monitor that. You want to see volatility decisively on the floor. You want it below 6. You want it to test 2, 1, 3 regularly. This is when you know that, okay, volatility for Bitcoin is decisively down, and I can be confident on the position. For now, I'm not, and it's quite hard to call. Another reason is because Ethereum, I know they are not totally correlated. Vi addressed that 2 weeks ago, but still, if you are long Bitcoin, for sure, you want to see Ethereum being ragingly bullish as well. And for now, Ethereum is still not decisively, it's not bullish. It's not even decisive. It's not bullish. It's trying to reclaim trade. Okay, good. Maybe you get a pop to the top of the long-term range. I don't know, to 3. But for now, volatility looks like crap. I mean, sure, it's down. It's still above trend. Trade is still quite far away from trend. So we are definitely not in what you would call a bull market for Ethereum, just look at what it looks like when you have a bull market. This is the volatility of Ethereum when we had the previous ramp. So if you are crazy bullish on crypto, I'm sorry, I don't get it. So watch this if you want to buy. I would not. And I think the pop that you just had was nice, but I don't think it's going to continue. Now, yields. So I was wrong on the 2-year. I expected it to stay in the chop box. It didn't. You can see here, I expected it. We have some kind of floor, but yeah. Something interesting is that it's trying to retest trade, but so far it's not significant. Trade is still up. So I will not read too much into that. What interests me more is the 10-year, the 30-year, and especially European yields. So for the 10-year, for instance, here you had lower high in volatility, and now we are making lower low. So this pattern here is the scenario 2 I was mentioning for DXY. You have a reclaim of trade. Now, let's say you want to shift in bonds. What you want to see is yields to continue higher, trade crossing trend, retest, and that's when you have a phase transition. For now, we are just in the early stage, I would say, of a potential change in regime for bonds. So this is really something you should monitor. If you are using my trade and trend signal, you should have seen that. You should have seen that it was crossing trade. Look at what happened here in January 24. So you should be monitoring that daily. 30 years is exhibiting the same pattern. We cross trade, and now we are retesting volatility trend. So you should monitor that. France 10-year, French 10-year actually already crossed trend. And you can see here volatility is starting to point down. So watch this one, especially if you are long French bonds. I don't even think you can buy them. And Germany starting to reclaim the trade. Trend is quite far away, so it doesn't matter, but it's exhibiting, all of them are exhibiting the same patterns. I'm going to conclude with stonks. So I mentioned Tesla was bullish, and for those who monitor the move, I think you saw that that crazy ramp. I actually got some sell signals for the past 2 days. So if you are long because you're insane, I would consider to take some profit. Google is still not there, and I think this is the reason why NQ is still dragging its feet. A lot of tech stonks are still not transitioning. So you see, it went to trade, and for now, still not reclaiming. Trend is very far away. So something to monitor as well. Some of them are crazy bullish, like Meta. Meta is crazy bullish. But a lot of them are not. Microsoft was trying to confirm, and yeah, it's trying to confirm, but still you can see here volatility trade is still above trend. For now, we rejected volatility trend. So what you want to monitor is you want to see a matrix here going down, and once we reach the turn, you want to watch, okay, where are we now? Is volatility below trend or not? This will be an indication for what's to come. Yeah, I think that's it. I mean, I have addressed what I was watching now. I hope you liked it.
Oh, Raphael, that was a great presentation. Thank you very much. Actually, there was one moment when you started talking about correlations, yeah, and you mentioned very important thing about the dollar and so on. But I was thinking, Yes, maybe he will mention the most important thing, which happens like very rarely. But no, I mean, my presentation will start from correlations. No surprise, because these correlations, what we see, not only are very interesting, but it's very rare, and at this stage in the market, it can actually mean some things about the probable end of their rotation. Of course, we'll see. So what I'm talking about. First, I'm talking about the XLU and and a little bit about XLP. But what we have, first you can watch the SPY column, and you will see that XLU 10-day correlation, its real-time data, is negative, and quite deeply negative to the SPY, and it's like this for a couple of days already. And now, if we just go to the XLU column, we will see that basically, okay, so what has a positive correlation? Okay, XLP and read, basically. That's the only thing. So I'll talk a little bit about what it means to me, but actually it's very interesting. And correlations are obviously negative on 5 days. Too, no surprise. And if we go to MFR on an end of day data, you will see that as well in the SPY column, that basically XLU correlations were quite crazy on a 5-day basis as well. So negative 0.7. Real-time data is, let's go to 5 days. 6, 5. Okay. Let's go to 5 days, and XLU to the SPY, yeah, basically no change. So I'm still on XLU. I'll touch on SHI later, so now we'll go to the XLU. But now I'm monitoring this scenario, which is with, well, not scenario, situation, which, basically after Powell dropped a bomb, of course, this thing went up, and now we see this correction. But actually, it makes me think, just because of what I see in the most important thing for me, which is correlations. I start to think whether it's just a correction from this strong bounce, or actually not. And if it's literally the end of this rotation to defensives, then it will actually be good for overall market bulls. So people who are long Q SPY. I'll talk about small caps later, because the situation is a little bit different. Because if this rotation is over, then we will see some up move in tech, maybe, which is of course hard to hear me saying that, but if that's the case, that could happen. So this is actually, when I saw that on Monday, I was actually not only surprised, a little bit shocked, because it's quite regular when we see that, for example, XLU or XLP get quite a low correlation compared to other sectors, but by low I mean positive, and still like 0.3, 0.4, whatever you name it. So what I'm doing now, I have a stop because I'm long this position for quite a long time, and basically the area of this gap is where I would just get rid of that and say, okay, so probably it's enough for me to ride this thing. But it's very important to note from capital flows perspective and probable rotation perspective. So XLP is basically the same, but I had XLU with a lot stronger signal for very, very long time. So I was not trading or monitoring XLP as much as I do with XLU, but XLP has also a similar situation with negative correlations, of course, not that strong, but monitor correlations and monitor not only correlations that are, and I know that I said before that, of course, dollar and bonds are the most important, but just check the defensives from time to time, defensives and things like IWM, for example, because it's really, sometimes it will give you very interesting information. So yeah, I'm still long. This gap is my value, but I really wanted to touch on this thing because it can change a lot of things for me. And at the same time, it would still be quite positive for the market. Yeah, so I wanted to touch on Shai. So I know that a lot of, and then no, DLT is dropping a lot, but basically retail traders, I believe they had quite a good lesson from this, what happened after the Fed rate cut, because I know that a lot of people had this quote unquote obvious scenario that if Fed cuts rates, we need to buy bonds. And I believe we talked about it multiple market talks ago, that those who wanted to buy bought way earlier. So, and yeah, and basically TLT is dropping. I know that it has nothing to do with this with the short end of the curve, but Shai is basically the same where it was on the hike day. Yeah, so now what I see in the equities markets. So I'll touch on all the candidates. So yes, it's the strongest, and it was the strongest for very long time. But yeah, so basically we had a rollover. I was not trading last week because of a rollover, and rollover gap is not filled. Rollover gap is not filled, and all gaps are filled. Majority of gaps are filled on the next contract cycle. It means that majority of gaps are being filled, for example, when September expired, so in the December cycle, so in this cycle, but of course not all. So yeah, this gap is still important to watch. If we get a correction down, it will be quite an important target. Also lines in the sand, the most important areas to watch that I talked about also multiple market talks ago, settlement prices. So we have a new settlement price because obviously September contract expired, and that level is 5,700 even. So 5,700 now is also very important level on ES. Below that, it will also open the doors for more downside. But of course, I'm just telling you what to look for. I'm not actually, I'm not bearish. I'm not expecting a huge drop, but as always, market will tell us what it wants to do, and these levels are very important to watch. So yeah, and everything actually happened as I was thinking that it will happen when NQ reclaimed the 19747 level that I was talking about. I said that ES will make all-time highs, which it did. No surprise. So now we have this scenario that NQ should catch up, but actually NQ looks slightly different also from this perspective that it's basically filled the rollover gap. If we are measuring I actually measure from close to open, so technically not, but at least it tried to do that. So those who are technicians, which I'm not, it depends how you measure that. I know some people will say that it's close, some people will say that it's not, but but yeah, so why I was not buying NQ, because actually there was a very good signal when NQ closed above 19747, which of course happened here. I was not buying for two reasons, and one which is the most important reason, because of rollover. And I'm sure you noticed that last week, these crazy movements were crazy movements to both sides, and this movement happens just because it happens every rollover, and it's a best idea to not touch equities during a rollover period. And it's not only for futures, because I mean, when you see what's going on in ES and NQ, when basically SPY and QQQ does the same, because there's no other way. Yeah, so but yeah, ES strongest, but NQ looks good. We have plenty of upside on the longer term range. It would be nice to get another correction, and actually today it tried, but well, market doesn't want to go lower for now. So levels to watch would be if we go below 20,000, then basically the settlement price of 19,800 and 19,747 will be the most important levels to watch. But for now, everything is bullish, and now it's not looking as weak as it looked before. So that's why in the beginning I said, in the beginning of the show today, I said that on surface it looks like market likes it, but not the entire market. So that's the important thing, that time will tell if we see this end of the run in defensives or not. But yeah, still, you know, good and bad news, because good news that if run in defensives is over, tech should be just fine. So we will see. My overall view in the ES and NQ, like I said, I'm definitely not bearish. I expect a range or a slightly grinding higher. So best case scenario that I'm seeing in upcoming couple of weeks, or let's say a month, is best case scenario for NQ, maybe going to previous all-time high. And as always, like we do, make a new high just to get a headline, but I don't expect it to then continue to go up very, very fast and strong. I still expect overall bullish market, but not really big rallies to the upside, or more probable scenario, we will have quite a wide range chop. But yeah, the least probable scenario would be if we get huge drops. By huge drops, I mean neutral and bearish trend and so on. So now what I wanted to touch again on two, which is small caps, and of course also FinFit, you know, is very, very smart always. And you know, when Fed rate cuts rates, you should buy small caps. That's what they say. So what concerns me a little bit, and why I'm not that bullish, why I'm not mega bullish, even though I'm still bullish, that because we don't see this happiness and conviction in the overall entire market. So yeah, what I would want to do, what I would want to see is the reversal in small caps for me to also become, like Raphael says, mega bullish. But for now, while we see small caps going down, that thing is what also concerns me a lot. And I know that now there are different narratives, that, you know, small caps are a lot of banks and so on, and, you know, cutting rates and financials. Why? What are you talking about? But yeah, but in my opinion, the more important factor for small caps is that basically interest payments on their loans, and small caps have a ton of debt. So that's my thinking. So yeah, watch IWM, but the most important thing to take from today is, as most likely, almost always, talk about the correlation. These are very important, and what we see in XLU, because if correlations were like, for example, it was 2 weeks ago, I would say, oh, nice. XLU is went up. Now we had 2 free red days. Awesome. Now maybe time to buy more because XLU looks great and so on. But no, with these correlations, my song is a little bit different now. No reason to sell, but like I said, time will tell, and maybe in 2 weeks we will see whether these correlations matter or not, and in most scenarios they do. So yeah, overall view, definitely not bearish, bullish. I don't expect market to make big moves up in upcoming weeks. But yeah, most probable scenario for me would be market stays in range, but that range should be quite wide. So yeah, don't panic, manage your risk. And what else? And another important thing, yeah, you better buy things that are going up with a proper risk management, and don't buy things that are going down. Yeah, so I hope it was useful, because at least I think that what we saw in correlations is very interesting and rare, and can't be ignored. So yeah, that's it from me.
Yeah, I just saw a question from Not Keith, and he was asking to address the China rally. So, any of you have an opinion on the Chinese rally?
I don't.
I'm trying to find the Shanghai Stock Exchange. I forgot.
I do.
Oh yeah, Ted.
Massive short covering, right? Jeez. Yeah, China's stimulating. It's funny because I was DMing with another friend of mine 2 weeks and a half ago when China was on vacation. I said, I think these guys are gonna come back with a bazooka. And that's exactly what they did. So I think they mean business about getting their stock market and their real estate market out of the toilet, so to speak. And the market responded. I mean, it was interesting because FXI was going up, KBA was not, and that is totally reversed. So I don't know.
I'm trying to find the tickers to. Can you give me some tickers for China? FXI, you said?
Yeah, FXI, KBA.
Whoa. Oh my God. Okay, yeah. Holy shit. Yeah, so basically we went to the top of the long-term range in 3 days.
Yeah. I'm monitoring futures, so I'm always looking at Hong Kong, Hang Seng futures, and a couple of mainland contracts. But again, why I don't have opinion is just because I don't do macro. So, like I was joking a couple of shows ago, if it's going up, it should be good. Yeah. So.
Yeah. I'm gonna actually show the people using the Myvola trade and trend signal. How again you could have seen this move coming. I explained 2 weeks ago about, or it was months ago, about when you should have bought bonds, and I'm going to show you why you should have bought China several weeks ago. Okay, so just to show, I mean, these moves, they are just so predictable. It's bad I wasn't watching. So look at volatility here. Volatility in blue. So you had the trade crossing trend to the downside here, and you had the retest here confirming that volatility, short term, medium term, long term, were pointing down. So this is when you should have bought on the 10th of September here. And then poof, everybody reacts somewhere here. But actually, if you watch volatility, you should have bought there. So now, yeah, it's overbought. I would say short-lived. What was the other one? FXI,
KBA.
KBA, yeah.
Oh, I haven't traded these ETFs for KBA. Yeah, right, this one, yeah, this is ridiculous. Another one for China.
I forget the other one. That's the only two I really look at. There's a tech.
KWeb, I think.
KWeb, yeah. Thank you.
Yeah. I don't watch Chinese equities because I remember a friend told me about Chinese stock. He said everybody knows which one to buy. So basically, it's how to say, there is insider trading everywhere in China. So, oh my God, again. So yeah, same here. Look, could have bought here, 10th of September. You didn't have the phone number of the central banker there, but you could have checked the volatility profile. You would have seen that, and you could have taken a bet. You put a stop below trade, and that's it. You get
yeah. Raphael, check the only one that I'm always looking at, HSI, and make sure it's futures, not stock. HSI, and you will see.
That started moving well in advance of the China.
Yeah. So I only trust futures, and I know that.
SH what?
I'll not start explaining why, but I only trust futures markets.
SH what?
HSI.
Okay, Hong Kong.
Yeah. HSI, futures. Yeah, the first one. Rock and roll. Wait. Yeah. Let's here we go.
That started moving well in advance of the move in China, right? Yeah.
See again,
guys.
That was your tell. September. Here again. Yeah. So volatility profile was saying, yeah, let's take a bet. So if you are, I mean, this is the way to use this script, guys. I mean, if you have it, just follow those patterns. Just take bets, and maybe some central bankers will do some crazy shit.
Yeah.
Hey, Raphael, I have a question for you, if you don't mind. Yes. I have a question about your VIX chart in particular. And what my question is that there's been a lot of talk about that print VIX 65, which was some argue was not a real print, and it was all pre-market. And you know, when you look at both the RVX and the VXN, which they peaked at 45 and 40, and my question is how much of that move that you're seeing is a function of that aberrant VIX 65 print on August 5th?
So the thing is, I actually checked the previous time sheet where I destroyed the paper with the dates. I checked all the instances, and I found one that was actually quite similar. And one could argue that it also printed at some point we should not consider. Frankly, I mean, in my opinion, of course I'm considering it. I mean, it's on the chart, so it doesn't matter if they say it was pre-market, so it doesn't count. But I'm going to show you the last.
Yeah, I'm not saying it doesn't count. I'm just saying that it was VIX. It was down 4%, and you got a 30-point move on the VIX, which a lot of people have said this is just doesn't make any sense. And you know, the others, VXN, RVX, I'm sorry, VXN and RVX did not print the same level of volatility.
So
that's interesting.
I mean, you want me to check, for example, RVX? How does it look?
No, it's okay, but just see, yeah, I mean, that might be helpful.
I mean, I have
that's
no
small
opinion
caps.
regarding that. Yeah, I have no opinion regarding that. I mean, if you're asking if I didn't see this chatter,
yeah.
so yeah, I haven't even considered it.
Yeah, okay. Just curious.
Just,
yeah.
Just to have a
look. No worries.
Yeah. Let's see if we have a buy on this one. I'm not sure RVX is actually a good indicator for buy and sell. Yeah, it's not. You see, it's shitty on buy and sell for this one. Let's try VXN for fun. No, it's not usable. Buy and sell is not usable on this one. Just checking quickly the vola profile on those. Vola is actually quite elevated too. I mean, from what I see, 45 on the.
Yeah, it did. It did print a 45.
Yeah, I mean, I'm not dismissing this print until proven otherwise. So, I mean, what I'm seeing right now on VIX is clearly I'm expecting a pop. I'm expecting a pop. In the next 2 weeks, we're going to get a pop of VIX to either trade or trend. And the only question is what will be the reaction of equities when this happens.
Yeah, and I guess my follow-up question is on that is could you see a VIX up, SPX up? So that's sort of, you know, up vol, up price.
Okay, so for instance, among the 4 instances when you have a retest of trade and trend, so I'm dismissing the one where we entered ultimately a bear market. Among the 4, one of them actually I was shocked. It was so VIX went from I don't know, let's say like 15 to 32 in a day, and what you had was NQ had a 1 red candle back to trend, and afterwards it started to climb back up like nothing had happened. So that's why my favorite scenario for now is just like a quick retest of trade or trend on ES and NQ, a viable dip that will actually surprise people. Maybe on some news, maybe some. It's usually the way it happens. You have a setup. So now my setup is I have a buy on VIX. Volatility trade is quite elevated, and volatility of VIX has to go down. And what happens usually then is you have a narrative that comes up. So war, I don't know, like some central bank intervention. I mean, it's going to come. Something is going to pop up in the next 2 weeks. I don't know what, but it's going to come. Yeah, base case for me right now is we're going to get like maybe 1 day, maybe 2-3 days down day, and then market is just going to brush it away, and we're going to continue to rally. So, and like I said, one of the instances was insane because I was looking at the VIX and was like, wow, this move in the span on 1, 2, 3 days, VIX just went ape shit. So I was okay. Let's go to ES and NQ and have a look at what happened. I was expecting a big correction, and I check, and it's only 1 red candle, like a single red candle down, and then it went back up. So yeah, that's my expectation right now. So
awesome.
I don't know if it answers your question, but
No, that's helpful. Thanks.
But yeah, one thing though, I mean, while Vari was talking, I was looking at TLT and it actually broke a trade. It's not looking good. So I'm quite surprised because I didn't expect this. I'm monitoring yields, but I rarely check TLT, SHY, etc. But it doesn't look good. It's not looking good.
No.
And now that I'm thinking about what the 10 year and 30 years are doing, trying to break trade as well. I mean, it's an early sign of a phase transition in yields. And is anybody talking about that? I don't know. But
Me.
looking at 10 years,
Yeah,
I am.
years,
I'm like
years,
right on the. I think we're right at that moment where it's either going to resume trend or we've got, like you said, a break and it's time to take profits and bonds and get out.
But Twitter is buying bonds all over the place. So,
Yeah, I'm very surprised. Yeah, I mean, a lot of people I consider as very smart investors who usually get everything right, and they are all talking about, yeah, I'm buying at 98, I'm buying.
maybe they are right. Give it some time. I mean,
Yeah, sure.
so
It's possible. It's possible. It's just something.
I mean, today's a day to buy, and if it's, the risk reward's pretty good, and so if it fails here, there's not a lot of loss. So I think we're right on that cusp. We might have that phase transition happening. So it'll be fine. Whatever.
What does it mean for example? I mean, you're the guy you follow, for example, for macro regarding bonds. Is he considering like a phase transition in bonds? And if so, what is his view regarding this phase transition?
Yeah, I mean, he's still showing bonds bullish volatility, still long 30%. AGG is what he uses, which is an aggregate bond index. But his expectation is inflation starts to accelerate after the first of the year. And as that happens, we get a problem. Now, I can see the shorter end of the curve continue to go down and the long end go up. And that's that steepener, but it's not my steepener, which is eyeball, is right. I'm not far from my stop right now. So we'll see. And I don't care. I'll just start getting out. As soon as it's hit, done.
Stop is a stop.
Yeah, absolutely.
I think in 2 weeks, it will be very interesting to have a look. Okay, guys. Let me check if we have another question. I saw that Keith was asking about China, but I don't think there were another one. If anybody is watching another question, feel free to ask. I'm not seeing anything. Checking Twitter just to make sure. And if nothing, we can wrap it up. Nothing on YouTube. And I'm not seeing anything on Twitter as well. Okay, we can wrap it up, guys.
Yeah, so like Raphael said, I think these weeks will be interesting, and during our next show, we'll see what actually happened. So yeah, thanks Ted, thanks Raphael, thanks everyone. I hope it was useful, and see you in 2 weeks, hopefully. Bye.
In 2 weeks. Bye-bye. Thank you, guys.
Bye now. Thank you.